So I make this bigger. All right, welcome everyone to the live afternoon swing trading floor. Today is Tuesday, September 22nd, and it is Tech Giant Tuesday. And I'm going to open my chat. Hello, Tanya. Hello, Jacob. Hello, Victor. Xochi. Hello, hello. Hello, everyone. You guys excited? Ariel, Tasikia, Tanya, yep. Mike, Jack, Ariel. Hello, hello. So I wanted to ask you guys a question. Are you guys up for something a little bit different today? I'm interested in trying to get an idea from you guys if this is something we want to do slightly different in the future, where we, of course, will review our watch list, the list of stocks you guys want, but we will also maybe spend a good 10-20 minutes talking about strategy. I don't know if that makes sense to you guys, if you guys are open to that, but type a uppercase Y or yes. Yeah, because it seems to me that we do review stocks, which is fine, but understanding the bottom line ingredients and strategy, I think is helpful too, especially when you're first starting out, right? You want to learn how this stuff works so you can make your own decisions on your own stocks and your own trades. So I always kind of hated the stock companies like that only do alerts. That's all they do is alerts, and it seems like, oh, I'll just follow my alerts and make all the same money they're making. But as you guys know, alerts don't really work quite like you think, because you don't always get the same entry, you don't always get the same exit, or they may exit or they may enter and then the alert goes out 20 minutes later and it's already made a big move. So you can't get in always at the same time. So I always feel like those alert services are kind of like getting addicted to crack. It's like they want you to be addicted to it so that they can keep you on the hook for more money in the future. So anyways, yeah, I'd like to do that. Maybe we can talk some strategy today. So I'm going to go ahead and put a link into the chat panel today. This is the strategy that we were talking about yesterday. And we're going to look at it a little further. We're going to back trade it some more. It's basically just the 10 EMA strategy. You'll see on my screen, the little green arrows are kind of where you buy at the close. And we'll talk about that here in just a little bit. So let's take a look at the broader markets. I did not take any trades today, believe it or not. I did not. And we talked about yesterday that there's this nice hammer forming yesterday. Of course, we gapped up today, went a little lower, retested, which happens in bullish retest gaps, and then continued a little bit higher. So that is SPY. It's still overall long-term. I think we're still very bullish. Short-term, it's going to be some chop, especially between now and the U.S. presidential election, which I'm trying to think what day is that. That's the Super Tuesday someone remind me, what is the U.S. presidential? It's somewhere in November 3rd? Okay. Right. So right here. So we're probably going to get some chop between now and then. So that is what we have on SPY, still overall bullish long-term. I do like to measure this. Have you guys ever looked at this tool over here where you can measure from like a close down to a low, and that, we did get a good 10% pullback. If we're looking at it on a longer term and turn on our naked put indicator, that this little blue line, we want to kind of sell premium in this zone. We did just barely kiss that line. It almost acted like a support there for us. So that is what we have on SPY. Let's take a look at Qs, which is my preference usually on indexes. It's usually a little bit cheaper than SPY, and it typically moves a little better performance-wise. So same kind of thing, we gapped up on a bullish retest. So let's look at the diamonds overall. Diamonds is a little bit more on the struggle bus, not as much of not these big bold moves. but we are still kind of above our long-term moving averages. So I would say this is okay. It's not quite as impressive. And the Dow Jones, I believe, is only like 30 stocks anyways, and they're manufacturing kind of oriented anyway. So that is what I have on those. So let's take a look at my list. Move it over here. So Ethan Allen is our is our first Tech Giant Tuesday stock. I'm not sure how you guys come up with these lists sometimes, but it's all good. So Ethan Allen, I believe, is the furniture store. So you guys can let's see, where's my line? You can see that we're kind of forming some higher lows, some basing through here. I still would stay away from retail, just because they're going to be on the struggle bus, and I don't know what percentage of revenue comes from their online sales versus their physical stores. But companies like Best Buy, I think we looked at yesterday, only like 40%, 42% of their revenue only comes from their online sales, meaning the other, the opposite of that is 58% comes from their physical stores. So retail like this is something I would personally just hold off on for now. Let's look at Bill.com. Obviously, this is a beautiful trend, right? If you're looking for, stocks that are on an escalator up, you're looking for stocks that start down here in the bottom left and go towards the top right. And you can see here clearly that even though it chops around a bit, we still got a bunch of S curves going on. That is a terrible trend. Mr. Squiggles. That's what happens when Mr. Squiggles drinks too much. I'm sorry. Oh my goodness. Let's try that again. All right, here we go. Try one more time. A little more sober. Sorry, there's something on my desk that's preventing my mouth. So anyways, this is, I think this is a solid company. I think it's good. If we look at on our medium term, you'll see that we did kind of reclaim the 10 EMA, which is my blue line right here. And the reason we did not get a green arrow, as we talked about the other day, on the strategy itself that we were discussing yesterday, is because we are the blue line needs to be above the green line. So if it would just switch just a little bit more, we would get that little green arrow here that basically just says buy at the close and put some kind of a lower stop. And in this case, you could have seen we could easily, got a good 2R out of that kind of a trade. Same thing here, probably not quite a 2R. But you guys can see kind of the basics of how that strategy works. Hello, Bob. Hello, Jacob. Danny. Hello. Is anybody here listening to Tesla annual meeting? I am not. I probably should be, but I'm not. If anyone is listening, I kind of post some updates as you get some. I am interested to hear kind of what's going on with Tesla. Tesla is on our list, TSLA. Let's see, it looks like we're up a little bit compared to the close. So we closed right here kind of at the bottom, and we're already kind of inching our way up. If we were to look at it on a 15-minute chart, you can see we're kind of inching our way up. Is that going on right now, guys? Or is that, some reason I thought there was something today at 3:30, 4:30 Eastern. Maybe it's a several hour long event, but either way. Tesla is very interesting. I almost pulled the trigger on some puts today, but I decided to wait. So you guys remember we talked yesterday about selling put option premium. So for those of you who are new to options, it's a little bit of an advanced strategy where I'm basically going to say, hey, I'm going to guarantee a price like this, like 280. And if the stock comes down to here, I collect the premium. If the stock goes down to here, below my strike price, I collect the premium, but then I have like an insurance claim that I have to kind of pay, where the stock gets put to me at 280. I got paid 20 bucks for the right to do that. That is a terrible 20, but that's kind of, I didn't quite do that. I really want to wait a little bit more The battery day is kind of a binary event. It could go up or down, whatever. Long term, I'm still very, I really like Tesla. It is on my list of 15. I did mention to you guys yesterday that I only trade a list of 15 stocks. That's it. Just 15. Taking time bomb. I apologize. I have a hard drive, external hard drive running. Is that better? My ticking time bomb has been diffused. So I apologize. I have a external hard drive that's been running, trying to copy some video footage from the retreat. I didn't realize I was coming through the microphone. It is actually a brand new, it's a brand new, we got that from the video production company. They gave us a big hard drive. So in case you guys wonder, we have like 2 terabytes of video data from our week-long retreat that we did ending about week and a half ago. So yeah, it is I guess if it just got moving parts, it's not a solid state. Anyways, moving on. So all that to say that Tesla, long-term, very bullish. We might get some pullbacks. I would be looking for some put option premium down here in the 280 strike, either 1 to 2 months out, something like that. And I'm looking for at least a 1% of the current price in premium. So I'm looking for $4.24, $424 a contract. So that, I'm sorry, I misspoke. So 1% of 424. That's right. Is that right? No, that's not right. I am not firing on all functions here. 424, that is right. Okay. So for a 1%, basically meaning I want to get at least $4. Last time I sold this, I sold it in here, sold it for $20, not $4, which is good. Bought it back up here yesterday at $5. Made some good gainage just in like a week and a half, 2 weeks, whole time. So, yep, that is Tesla. I really like Tesla long term. Be bullish. There's a lot of people who've lost a lot of money trying to bet against Elon Musk. Don't be that person, right? And if you want to look for stocks that are bottom left to top right, I mean, this is a great example, right? Yes, there's some chop. Obviously, COVID happened down through here. But the rest is history. I was watching a documentary this weekend on Elon Musk, and I don't know, what can you say bad about the guy? Yes, it's pretty bold. Yes, there's some unknown, there's some risk with Tesla, but I think it's a pretty innovative company. And if any of you have any of you got a chance to test drive a Tesla before? Put a T in the chat pane if you've got to test drive a Tesla. Yeah. Jack, we have a team of people that actually edit the videos. I mean, it's a lot of work to edit 2 terabytes of video. That's a lot of work, but we have a team of that we use that does that for us. So, yeah. Yep. So for those of you who haven't been able to enter a T, we're not going to make fun of you. It's okay. You haven't test driven a Tesla, but I want you to try one. Go make an appointment to test drive a Tesla this week, next week, sometime in the next few weeks. It's amazing. It's an amazing piece of machinery. It is more like a computer with wheels than a car with a computer. And just trust me on that. When you stomp down on the gas, you feel like, on a roller coaster where gravity kind of gets ahead of you. It's amazing feeling, amazing product. It's definitely, you can definitely tell that that's the future of where vehicles will be going. And Tesla is positioned great in a great spot to be able to lead that. The transition from gas engines to electric. So that is Tesla. Let's take a look at another one of my favorites, which is kind of on the struggle bus past month or two, and that is AYX. You guys heard of AYX? So they provide artificial intelligence analytics, and you can tell it's kind of just been hanging out, kind of not going anywhere, up, down, kind of just bottoming a little bit. And I do like this long term. So if you guys want to grab a few shares down here, maybe pyramid into it. So you buy a little bit here at this level, buy some more down here, buy a lot more down here, something like that. And as the price goes lower, you're adding and adding. Maybe you just buy 10 shares here, maybe another 10 here, and maybe 20 or more here. So I think it's a great long-term company. They did have a little bit of some setbacks due to COVID, which there's a lot of companies that did. There's quite a few who didn't, but AYX is one that I really like long-term. You will see here that my green arrow did not trigger here because we're not above the 50-day exponential moving average. It did have this gap, which at some point this gap here will be retested at some point, probably not this week. And so that was based on earnings. Yeah, Jay, AYX is kicking your butt. So I actually was not in this when it took the drop. I do like it, and I've traded it many times all throughout some of these S curves through here. I do like it long term, and so I'm going to be slowly tipping my toe in, slowly buying. There's no reason to buy a ton right here when it might go lower before it goes higher. And we do have earnings coming up right after Election Day, 2 days after Election Day. So there's something to be mindful of. Companies, when they're struggling, trying to make sense of their data is kind of a last minute or back burner kind of budget item. So, it makes sense that that they didn't grow quite as quickly as they wanted to. Let's actually take a look at AYX real quick in here. Let's see. Yeah, so they only grew 17.3% for the quarter. So their most recent, if you guys can see that, I'll zoom in, 17.3% for the quarter. So I like the 30% plus, but you know what? I still like it. They're allowed a little bit of wiggle room with the coronavirus and all the craziness that has brought. So overall, it's good. The PS is still a little bit high. The price to sales ratio, ideally 10 to 15 if they're growing 30% or more. So it's kind of right where it should be, but their growth isn't quite there for the year. And the saving grace here is that if you look at their sales, how much revenue sales they've done in the past 5 years. So they've averaged their past 5-year average 61.5%. And so this last quarter, 17.3. So you can kind of put two lines together and say, okay, this is just an off month. It's a good company that had a bad quarter, right? And there's a difference between a good company that had a bad quarter and a bad company that had a good quarter, right? You don't want to jump into a bad company that had a good quarter. But I want to hang out and hang on to some good companies that have bad quarters. So it's a good time to buy. And you'll see here, for those of you who are a little new to technical analysis, you'll see that on FinViz, this is the free version, that they will draw some of these trend lines for you automatically on the image itself. So that's pretty helpful if you're unknown, or if you're not new. If you are new or you don't know how to draw some of those lines. Now, some of these lines don't always line up with how I draw them, but it's a good kind of start. Yep. So John, that's the answer, is their earnings. And you'll see here, even on this chart, that lots of volume. So I'm telling you guys, if we get up over this candle here, if we close up over here, over this candle right here, if we can close up above that level, we're going to be chopping, or we're going to be going higher. Sorry, that looks like a swastika. One-handed Mr. Squiggles today. One-armed Mr. Squiggles. Oh my. All right, guys, just pray for me. Pray for my drawing skills. So anyways, and so the idea here is, because there's so much volume here, anybody that shorted in this area, right? Anybody who shorted here, if we close up here, what happens? What happens? What's going to happen is all these people are trapped, right? So they're going to be squeezed. It's called a short squeeze. So it's going to push the price higher as all these people who are short all through here, which is a good, what is that? That's a good, so far it's a good 6 weeks worth. So as they're trapped, they're going to be looking for exit. And as they exit, the price will be pushed higher and higher as they as they're looking to exit and buying at whatever market price they can to exit, driving the price higher and higher and higher. And so that's why when we talk about short squeezes, that's kind of what we're talking about. In this case, I don't think they have a ton of short. Yeah, there's not a ton of short float out right now, but obviously, ideally something more than 20%. But we're close to 20%. So that is AYX. Any questions so far? Y'all with me? Am I putting you to sleep? I'm just having fun. Whether you guys are paying attention, I'm just going to have some fun. So it's all good. All right. So let's look at AMD. I love this one long term. This one is not on my my watch list. Again, if you're looking for a stock that goes from the bottom left to the top right, this is not about. This is a decent one. And you'll see today, even though we kind of gapped up a little bit, went lower, we did close near the top half of the candle today, even though it was a black candle. So something to think about. We did put in a second higher low. So the low here is higher than this low. Do you guys see that? When I first started trading, I'd hear all these terms. I'm like, what the heck? Higher low, lower high. Is anyone still confused by that? Put a 2 in the chat pane if you're confused about some of these terms. And I'll explain it to you real quick. Higher low, lower high. Otherwise, we'll move on. Is anyone confused? We good? Nobody's confused. Excellent. Are you guys there still? Put a 6 in the chat pane if you're there. Okay. Great. So this is AMD. So typically what I would look for in a big candle like this is some kind of a pullback, a limit with something like this. This is not a trade I'm taking because I have my eyes on some other things, and this is not on Matt's approved watch list, but I would do something like this. Now, if you had set this up yesterday, obviously you'd be triggered in, you'd be, up maybe 0.2 R, something like that. And kind of what you're hoping for is you want a little bit more pullback as you continue higher. Now we are getting closer to, we're less than a month away on earnings down here, so keep that in mind. Earnings are a binary event. You never know what could happen. And you either want to be in or out, but you don't ever want to be surprised, right? How many of you guys have ever lost money on holding over earnings and you thought the earnings was a week away, or maybe there's a website that said it's a week away and another one's, sometimes the financial websites aren't even the same. They say the earnings dates are different dates. They're not even sometimes on the same page. But how many guys have ever lost money on holding stock over earnings, not realizing that earnings are here? Sometimes that's a good thing. Yep. Sometimes, John, AYX. Yep. RKT. Okay. Yeah. So at the end of the day, what I like to do is I schedule an hour on my calendar. I don't always use it, but an hour on my calendar every day before market closes. And this is how I approach trading. And an hour before, I'm going to look at what are my open positions, right? And I'm going to look, do any of them have earnings coming up? Do I want to hold over earnings or not? Obviously, if it's in a long-term retirement account and I'm good with holding it for years, then it doesn't necessarily matter whether or not this is going to be an earnings, because I'm going to hold it for years. And obviously, if you hold the stock for many, many years, you're going to have lots of earnings and you're kind of sticking with it long-term. If it's a swing trade, kind of a couple days, a couple weeks, I absolutely want to know whether or not earnings are coming up. So that's one of the things I look for on my checklist. So I literally block off an hour on my calendar every day before the market closes to check, do I have any open orders, right? I might have some open orders I want to adjust. Sometimes I have puke orders open that, haven't filled in weeks. And so I close those down so I can kind of free up some buying power. It's not put on hold if any orders are put on or are executed. So I do have a checklist of things that I look at the end of every day, an hour before the market closes. And that's kind of how I approach it. But I've learned a few times, took me a few instances where I lost a chunk of money, was up nicely, a couple, 2, 3 R, and I ended up being down 2R on the trade that I could have locked in a 3R gain, and I went to minus 2R if it gaps down, just like on AYX. That happens too frequently, and you just have to, you know, make it a habit, put it in your routine to double check that kind of stuff. The other thing I look at the end of the day for strategy is I like to look at whether or not I want to increase my risk exposure. So let's say I have 5 open positions in my main trading account. How do I know? How do you know? Do you want to go from 5 down to 2, or do you want to go from 5 up to 10? And this is something that it's taken several years to figure out. That is another key component of swing trading, is when to exit, when to lock in your gains early, when do you increase risk, when do you decrease risk, when do you add new positions, new orders, when do you kind of wind those back. And I think of it a lot like sailing. It's like when you know when to put the sails up or when to take them down. And that's a big piece of swing trading, is figuring out when does that make sense for you. And everyone's plan is going to be a little different. For me, if I'm up nicely already on the month, so like right now, I think I was up like almost 14R by like the first week of this month. I haven't made tons of trades since, but I'm not going to get super aggressive and give back a lot of my gains right now because I'm up nicely. I'm going to play a little more conservative the rest of the month, which is fine. That's kind of my approach. So I didn't take any trades today, and that's fine. I looked at the market probably a whopping 10 minutes this morning. So anyways, that's kind of how I approach. I don't know if that was helpful. Some of you asked about what is a puke order. So Joseph and Victor. Yes, so for me, at least, I've tried to, at least with my accounts, Victor, puke orders do tie up my buying power. I don't know if you guys experience that in IB or whatever, but it does use my buying power, because I can have 0 positions and a bunch of open orders, and they'll say, oh, nope, you don't have enough buying power. So if I have 20, I'm selling 20, 20 different trades on put options, like naked puts, puke orders, then I got a lot of money tied up on things that might fill, who may or may not fill. So it does tie up your buying power. Yeah. And so just to clarify, Sammy is answering it there. A puke order is basically just an order that, so like on Tesla, for example, let's look at it. It's just kind of a Hail Mary. That's a good way of putting it. So let's say I want to sell a 280 put down here for 20 bucks is my normal. I'll just say, hey, if I can get 30 bucks, that'd be even better. And what that implies is that the stock price has to approach this level a lot more, and then it gets filled, right? So like if your bid ask on something like this, let's say it's 19 by 21, in the mid-range is 20 bucks, kind of what it is now, right? And I say, I'm going to put an order out there at 30. So it's a ways away from there now. I'm going to put it out in 30. Maybe I go take a nap, right? I need my beauty sleep, especially with my injury, right? So I'm just waiting. So obviously a 30 is not going to get filled, but if there's some big sell-off or some Elon Musk tweet or something as the price approaches my level, it's a puke order. That's kind of how that works. So yeah. Does that make sense? Okay. All right, let's look at a couple more. How are we doing on time? Dang. Need to speed up. So let's look at Roku. And so Roku is another one on my favorites list. I don't currently have a position on it. I took some gains off right through here the beginning of the month. It's one of my favorites. I would not buy here. I think Roku hit an all-time high. Yep, today. So for those of you who feel like you missed out and you want to chase it higher as it goes higher, I would caution you. I've made those mistakes. Buying up in here, it certainly could go higher, but what's more likely to happen is it goes lower and then continues higher. So for Roku, on a big candle like this, a big day candle like this, Jeremy would say somewhere around half of it, it's going to retrace, kind of retest a little bit. So something like this where you wait for a limit buy here with a stop market down here, something like that makes a lot of sense. Personally, I am going to wait for a couple sell-off days in a row, and then I'm going to sell a little bit of put option premium. So someone's going to pay me to take it from them at a lower price. Sometimes, every once in a while, Jeff, I do sell in the money put option premium sometimes, and I'm paid and compensated nicely for that. I don't know if you guys know much about Roku. Everyone assumes it's just that little hardware company, excuse me, but they're doing so much more than just the hardware. They have a lot of companies who are have their operating system built into their smart TVs. They have the Roku channel, they do advertising, they do a bunch of other things. So it's not just the hardware, a little USB stick you plug into a TV. My whole family, I think a couple of Christmases ago, we bought all the parents and grandparents, we bought them all Roku players, and got them set up with, throughout the Dish TV Direct Network, AT&T Uverse, threw all that out that they were paying before. And now they use Roku and they subscribe to YouTube TV. So they get it on their iPads, they get it. I mean, that's the future. That's where things are going. And Roku helps kind of facilitate that. So I know that there's lots of smart TV manufacturers who have their own built-in smart TV system. And Roku is, it's just a way to make older TVs kind of a smart TV. So, yep. Yes, yep. Okay, let's look at what's next on my list. Square. Let's look at Square real quick. And I'm going to run out of time if we keep this pace up. Square, again, another great company, bottom left to top right. Check that box. What I always think is interesting when people look at Square compared to something like Ford, like, does this look like a bottom left to top right company to you? And yeah, if you zoom in, super zoomed in like this, it does. But I don't know. When I think of innovation, when I think of companies that like are really doing amazing things, like, do you guys, like when I say innovation, I know the company you guys always think of immediately is what? Sears, right? You think of innovation, right? No, it's the opposite innovation. You think of JCPenney's? No. You think of Ford? No. You think of Tesla? Yes. You think of Shopify? You think of some of these other tech companies that are really super, super innovative. And these big, large companies that have been around hundreds of years, it's super, super hard for them to innovate because they have all these layers of crustaceans and bureaucracy that you have to kind of carve through to create any kind of innovation. And so the easiest thing for these big companies is just to buy another company that is innovative. But at some point, they kind of bring them into the fold and they get layered with bureaucracy, and then the innovation kind of dies and they repeat the process all over again. So for at least for me, companies like Square, as you guys know, the little credit card swipe thing that came out with years and years ago, it was brilliant, right? It's innovative. It helps small businesses facilitate their e-commerce, their in-person sales. Yep. I do think, JCPenney's not what I think of. I don't even know when the last time I went to a JCPenney's is. I don't even know if there's any stores around me here. But Lulu is okay. I mean, it is still clothing. My kids love Lulu. My two daughters. Does anyone know what percentage sales Lulu does? But again, bottom left, top right, that checks that box. And does anyone know what percentage of sales are set up for Lulu for online versus in person? There's a Lululemon store 10 minutes from here, from my house. Yep. Again, this is a decent one. I don't know if I would put them in the hip bucket, the cool bucket, not necessarily the innovative bucket, but that's just me. So, all right, let's look at a couple more. DLTR, Dollar Tree, not necessarily innovative bucket, kind of a hedge bucket, right? Kind of like a, not really, I don't know. When you guys see this, what do you think of? I don't really think of the bottom left to top right. I think of just kind of slow and steady, right? Kind of like the Dollar Tree. Yeah. Okay. So not my thing. I would not play that one personally, but let's see. Oops, let's move my lines. So actually, let me put these back. So one of the strategies that I like to employ is pyramiding. So you guys may have heard me talk about this, where you're going to buy a little bit here, a little bit here, and a lot more down here. And so for Twilio, I got filled partly here. So I put these lines on after I had this gap up. I got filled partly here, and it ran. I was about at 25% of my position. It ran, and I exited. But I'm going to wait for it to pull back again, and it will. It may not go all the way back down here, but that's one of the reasons why I like to revisit my open orders. If I've had open orders for 90 days and they're not getting filled, I need to revisit them, right? That's part of my checklist at the end of the day. So I do like Twilio. It is on my Matt's favorite list that Matt is allowed to trade. Let's take a look. And there's our triangles, as we talked about yesterday. We want to touch on some strategy a little bit here. Let's do this. So our strategy yesterday we talked about is we're going to close below the 10 EMA, and then we're going to wait for the very next day to close above. Yep, no worries, John. So this is a strategy that I will share this with you in chat. This is a kind of an indicator that I built to kind of help facilitate the strategy. And the strategy is basically wait for a close below the 10 EMA, which is this blue line. You guys all see that on all these candles here, after we gapped up, we closed below, and then this one we closed above, right? So think of it like a U-turn. We want to close below and then close above, right? It's kind of a turnaround reversal. So the strategy says we will buy at the close, and we'll put our stop down here somewhere. So we're not doing a stop market. A stop limit. We're just buying at the close. So typically what I do is a few minutes before the end of the close, I try to micromanage my order, get it, make sure it gets filled. Maybe I tinker with the limit by a few pennies here and there to make sure I get filled. Sometimes I get partially filled and I don't get a full fill. But that's typically what I like to do, is micromanage the order right at the close, make sure I get in. And I don't know what's going to happen here, but at this point, let's take a look. How you get filled. Yep. So that's how I just micromanage the order right at the close. And again, this is a very different, my approach is very, very, very different than Jeremy's approach. We all have, that's one of the beauties of being in a community, is everyone has their own like style and approach. So you guys all following me so far? We closed below. We're going to buy right there at the open. Is everyone with me so far? If so, put a 10 in the chat pane. DJ, yep. Got another Matt in here. Matt's rock. Okay. Brett, yep. Okay, so John, how do you enter? You just buy at the close. So I'm in the central time zone. So at 4 p.m. is when the market closed. I'm sorry, 3 p.m. is when the market closes here. So what I'm going to do is I'm going to wait 5 minutes before the market closes. I'm going to look, are we above the 10 EMA? And this little, in case you didn't know, that little green triangle says, yes, we are. And it's a green light. This is one of a couple different things that I teach. And so I just buy at the close. So let's get a couple candles. Let's see what happens. I really don't know what's going to happen, but let's take a look. So at this point, we'd be down almost half an hour, right? Are we going to panic? No. Are we going to, we're going to stick to our plan. And obviously you guys see that we got a couple more triggers where we closed below, then closed above. Still in the trade. At this point, we're up maybe 0.6 R. Don't know what's going to happen, but if I had to predict, you can see kind of something like this coming through, some S curvage. And at this point, I would probably just go ahead and move my stop up a little bit since we had some sell-offs and we didn't go further. So we're gonna, worst case scenario, we're gonna lose less than an R. Boom, we're at 1 R. Now, how many of you guys would have panicked right here and sold and taken a loss where you kind of sabotage yourself? You jumped in, you took control of the autopilot and tried to tinker with it, trying to save yourself some time, and you end up losing out on, you know, so far we're up 1 R, 1.1 R. How many of you guys would have done that? So it's not a market order, but a limit buy, right? Because we're trying to buy it right at the current price when we enter. And the green triangles are a script, yes. Let's see, there is the link. Kind of just illustrates on the screen when to enter and exit. You guys with me? Let's see what happens. Okay, now I'm back down to maybe a little lower, back to where, okay. Oh, new high. You guys with me so far? Boom, 2R. Let's see, 242.13 and a high of, what? Let's see, it's a high of 242. Not quite. There we go. In case we didn't hit it, we did 2 days later. So all of this just helps illustrate and demonstrate that the strategies don't have to be super complicated. I do use some complicated strategies and I teach complicated strategies, but if you're just starting out, trust me, just trust me, you're gonna want something very, very simple. Just something that you can follow. And at the end of the day, your job is not to place trades, right? What is your job as a trader? Someone tell me. Your job as a trader is to blank. Is to execute your plan. Execute your plan, follow the plan, yeah. So if you don't have a plan and you're just trying to trade and you're trying to explain your strategy to someone else, you know, like, how does that work? How do you, if you don't have a plan, how do you back trade your plan? How do you practice it in a safe environment? So you guys, we literally just back traded this exact setup, this exact strategy just right now. And that was it's probably a good month's hold time. But if you guys who are struggling as a day trader, if you are, maybe, just a suggestion, maybe day trading isn't your thing, maybe swing trading is your thing. And that's one of the things that I've learned in my trading career is I would make money swing trading, and then I would try to day trade how Jerremy trades, and I'd lose all my gains. So that was an easy fix, right? Just stop day trading. Pretty easy to fix. And I do take an occasional day trade, like once every 5-6 months. But this trading thing doesn't have to be hard. You don't have to be in front of the monitor all day, every day, trying to grind out a few dollars every day. It doesn't have to be that way. Even at the retreat, as we talk to some new traders, some experienced traders, people have some limiting beliefs that they put on themselves that weigh themselves down, that make it very, very difficult for them to be successful. One of those beliefs is I have to make X number of dollars a day, which I'll tell you right now, if you're starting out, you do not want that pressure on yourself. You do not want to start out your trading career with that kind of a thing, that kind of pressure. It's kind of like going to being in law school, right? And saying, I'm learning how to be a lawyer, but I got to have a certain number of billable hours every week. It's just, it's not practical, and it just you sabotage yourself. So in this case, we just, we bought, we held it, we increased our stop, we were going to lose less than R, and we exited at 2R. Now, obviously there's more advanced things we could do here. We could sell, put on a collar, we could sell some covered calls up here, we could buy, use that premium to protect our lower strike, some advanced stuff. But this is a simple strategy that I'm just trying to illustrate and explain to you guys, that you don't really have to grind it out all day, every day in front of the computer. And I know a lot of you guys are sitting in front of the computer and you're spending lots and lots and lots of time. And I like simple. Yeah, John, I very much like simple. And if you have a simple plan and you can execute the plan, that's really all you need. And if the plan loses an R, that's fine. You did your job, right? Right? Like, every trader loses money. I could show you some losses with zeros on it. I've made all the mistakes. That's my superpower. I'm really good at making, I can make those mistakes. And that's one of the things I just want to encourage you guys, that if you're really struggling as a day trader, maybe, just maybe, think about and maybe just start picking up some swing trade strategies, kind of spend some time back testing, back trading them, and just see what you think. See how, you know, if that's maybe your style. So for me, I was a CEO of a software company for 14 years and spent 12 hours a day, all day, every day in front of computers. The last thing I want to do is spend my whole day, now that I'm semi-retired, I do not want to spend my whole day in front of computers. I just don't want that. That's not financial freedom to me, right? That's like bondage. And so I really want to be able to do whatever I want. Today I got to take a nap. Hey, in the middle of the day, I'm not stressed. I'm up nicely on the month. Everything's good, right? It doesn't matter whether the market sells off and poops its pants today. I have my R's, I'm good. I've got some hedges on. I have some collars on if things move against me. Everything's good. And so taking this type of approach that I'm talking about is a much more, you know, kind of a lazy, easy Sunday afternoon, easy like Sunday morning kind of approach where you can take it slow and steady. You don't have to get stressed and worried. And, you know, every time you wake up, you're not stressed if you see a red P&L from open swing trades. And then you're trying to jump in and day trade and you see 2 or 3 R unrealized, you know, P&L on your day. You know, you don't have to fool with all that, right? So it just makes it easy. That's my approach. And I just want to encourage you, some of you who are struggling, just think about giving this a go, the whole swing trading. And again, I only spend a couple, 2-3 hours a week swing trading. So, yeah. So, thank you, Jacob. Jacob, actually, funny story. Jacob, his brother, Jacob Anderson, who's in our room here, his brother used to work for me, his brother Sam, and he worked for me in my software company for, I don't know how many years, was it 5, 6 years, something like that, until I sold the company. And so, I mean, these guys know, I mean, you put in a lot of time in front of the computer all day, every day. You don't want to have to repeat that now, you know, unless you absolutely have to. But now I'm at a place where I can choose how I want to spend my time. I enjoy sipping tea on the patio with the wife, right? I enjoy spending time with my kids, taking my daughters out to lunch, right, on dates. So that's the kind of stuff that you hear about the project. Oh, man, I love you guys. So put something awesome, put some smiley faces in the chat pane if any of this kind of connects or resonates with you. I just want to encourage you guys, it doesn't have to be a struggle. You make it a struggle, you put all the stuff on your shoulders, you weigh yourself down, and then you try to run, and then you're stressed. It doesn't have to be that way. It did take me a while to learn that I'm not a very good day trader, so that's fine. There's a lot of things I'm not good at. I'm not very good at brain surgery. Never tried it, but lots of things that I'm not good at, and that's okay. I need to find the things that I'm really, really good at and kind of practice and hone those skills. So, yeah. Cool. I'm glad you guys are awake and out there listening. Yep. Give brain surgery a try. I don't know if they'll let me. Who's gonna volunteer? Yep. Okay. So let's look at a couple more, and then we'll get your list we'll get your list for. Let me see what else is what happened for tomorrow. Boom! Look at that. See. Some of you guys would have panicked on this day. Obviously, we exited at 2R, but you can see what kind of would have happened. It's going to chop around. Yep, new highs. So let me play this out, see what happens. Just hit the play button, see what happens here. It works really well when you exit at 2R. We're getting close to where we are today. There we go. All righty. My work here is finished. All right, let's move on to what's next. CrowdStrike. I like this one too. Let me turn off my arrows. And in case any of you didn't, what amount of partial did you take at 1R? So I actually didn't take a partial at 1R, Nancy. I just moved the stop up a little bit. So a lot of people ask RLT and support, they ask us, what is your win rate? And I talked about this a little bit yesterday, but your win rate is just like one ingredient in a bigger formula, right? So If I was to flip a coin, right, and let's say I'm gonna flip a coin 10 times. If I get heads, I win $2. If I get tails, I lose $1. Let's say heads is 2R, tails, I lose 1R. And you guys can see 50-50 odds, right? The 2-to-1 ratio, you're gonna be profitable. And if you don't believe me, try this at home this afternoon. I did this live at the retreat, and people were guessing, you know, what's gonna happen. We did 10 flips, and I think by number 2 or 3, we were kind of floating around the 1 or 2R, up 2, down 1, up another 2, down another 1, down another 1. And after 10 flips of the coin, we were up 8R. And that's the thing about managing your risk, is you can easily have even 50-50 win rates if you win $2 for every $1 of risk. Jeremy will tell you, he's very honest. He'll say his average win is $1.40, but his average loss is 70 cents. 1.4R, his average loss is 0.7R, which, as you guys can tell, that's still a 1-to-2 ratio. And so when you have 50-50 odds, it really works well like that. Yep. John, the 10 EMA is the strategy designed for the daily chart. Yep. Thomas, I can trade the 10 EMA. I use that on my list of stocks. Obviously, there's some stocks that don't work well. Part of what I like to do is every day I like to spend a good 20 minutes a day back trading things and learning what strategies work better on certain stocks. And if you have the same 15 stocks that you look at and trade, you don't have to go build a brand new watch list every single day. And you're jumping into stocks that you don't even know how they trade. You don't understand the personality. You don't understand. And if you're day trading, you don't really need to know all that. But for swing traders who hold things for days, weeks, months, or years, I like to have a better understanding of what the company is. Sometimes I'll call their IR, their investor relations departments. Sometimes their salespeople will reach out to me and give me a demo of their software. I like to just go deep on some of these companies. So that's my approach. It doesn't cost any money. I just want to understand, kind of what they do, how they operate, kind of who they compete against. And so that's kind of how I operate. But as far as CrowdStrike, I mean, something like this, I don't have any current positions, but if you guys wanted to wait for a little bit of a pullback, I don't know if we're going to get that on CrowdStrike, and that's okay. The last thing you want to do is chase it higher, because trust me, if you go full position right here at the top, this shaved top, Marbozu, can't ever pronounce that, shaved top candle, then what's going to happen. Like Murphy's Law is going to come knocking and say, oh, you bought up here, you're up slightly on the day, boom, let's have some pullback, and you're going to panic, you're going to sell here. You're supposed to buy at the support and sell at the resistance, right? You're kind of doing it backwards if you're chasing it. But trust me, every single stock out there is going to have some pullback. The question is whether you're willing to wait days, weeks, or months for that to happen. And it's up to you. I just want to make money. I don't necessarily have to make it immediately. So I'm willing to wait. Yep. So that is CrowdStrike. Let's look at a couple more. Spotify, SPOT. Yeah, looks kind of like a dragon head, doesn't it? Oh my goodness. Wow. Got some whiskers and some ears and a neck and a little hump and some legs. Oh, my pain meds are wearing off on me. Oh my, but I do like Spotify. I think it's an interesting company. It's not on my list. My daughter does have some songs out on Spotify. I know how they operate, I know how they make their money. It makes sense. So yeah, Spotify is a decent one. Let's look at it on a medium term, and let's look at it on like my put indicator. Yeah. So obviously this day right here, we got the green dollar sign, would have been a decent day to sell some premium. This is not on this is on my no-fly list. It's not on my no-fly list. It's not on my watch list. It's not on my Matt's approved list. So, but yeah, I think that's good. If you can get some decent premium down here at the 190, 220, somewhere in this range, I think that's decent for a month, 2 out. Yep. People like their music. That's not going away. I don't know. Let me check what their Spotify. Let's see what kind of margins they get. I don't know if it's super high. Yeah, so 25%. So when I was younger, I read this article that there's 2 types of products in the world, and I'll zoom in so you guys can see that. There's 2 types of products in the world that have really good margins. One is perfume, right? If you think about perfume, it's a little glass bottle, got some chemicals, sell it to you for 120 bucks, right? There's some margin, okay? It does not cost 120 bucks to manufacture. Cool little bottle and some chemicals. The second product besides perfume is software, which is why a lot of my watch list is heavy tech, heavy software. And so if you look at companies like a pure company for software as a service would be a pure software company that does software. Look at this, 74.6%. And this is CRM. Now CRM is not on my watch list. I just want to illustrate. They literally make 3 times as much. Their gross product costs are way cheaper, and their margins are much nicer than Spotify. And Spotify is, as you guys know, is a music streaming service. They collect, people pay for the monthly service, and then they pay out a lot of money to their artists, to the talent who provide that music. And they don't pay, it's not that great. My daughter, I think it's like a penny and a half for every 1,000 streams. So you got to have tens of thousands, millions of streams for that to even start generating any decent amount of money. So even then, there's still gross margins only 25%. So just little tips and tricks there for you to think about. Okay, let's do one more, and let's do 2 more. Baba, I like Baba. It's not on my list, but I like it. Looks like we got a decent kind of hammer here. Looks like it's kind of chopping going sideways. So if you wanted to play this, what I would do is I would wait for some kind of a pullback. Oops, let me undo this. I would wait for the price to drop kind of in this area, and then sell some puts here or here, and collect some premium. And again, it is an advanced strategy. I realize that some of you guys have never traded options, and I'm talking about advanced option stuff. But this is it's one of my favorite strategies, selling some option premium. And I might be teaching the selling option premium class here in the next maybe a month or so. Would that be helpful for you guys? Okay. Yeah. So I'll try to get that scheduled. I did talk about it at the retreat, kind of updated my notes, and this is a new indicator on how it's done. It's not complicated, but I will tell you this, guys, if you're intimidated by any of these strategies, I promise you, if you spend time with them, they become less intimidating, right? It's like this magic thing. Spend time with something, you get better at it. When you get better at it, you build your confidence. When you build your confidence, you have zero hesitation to pull the trigger when those trades set up. And you may wait weeks or months for them to set up, but there's no hesitation. And one of the things that we heard a lot from the retreat a couple of weeks ago was that people, they see a setup, they know what to do, they just don't pull the trigger, right? It's like, have you guys ever had that? Put a 5 in the chat panel if you've ever done that. Like, I know what to do, I'm just scared to do it, right? So the good thing is all you got to do is spend 20 minutes a day back trading your plan, your strategy. Spend 20 minutes a day, and then you become more comfortable with it, right? And you are taking financial risk, of course, but it's not such a foreign concept, and you do get some kind of, you build your confidence, and you're able to kind of take that step out. But you guys have heard the term or the phrase that scared money don't make money, right? So if you're shaking and your heart's racing and you're going to hit send order, I mean, that's not a good place to be in, right? You want to practice in a safe environment. So once the markets close, I encourage you guys, open up your trading view, go back in time, take my little 10 EMA, spend 20 minutes a day on Shopify on, you know, 3 or 4 or 5 stocks that we talked about today. I'm sorry, Shopify, pick whichever ones you want, and practice it. See how you're able to, if you're able to carve out some R's. And then when it sets up in real time and during the day, you're able to place the orders. You're confident, even if it moves against you right away, you're not going to panic because you've seen this happen in a safe environment. And back trading is like the batting cages, right? It's the batting cages for traders. It's where you go practice and practice and practice. In karate, you know, you have, you're sparring, right? In soccer and other sports, you have scrimmages. And that's really all it is just practice in a safe environment. And in a safe environment, you really don't have to worry about losing R's. When the market's closed and, you know, it's after dinner, before bedtime, whatever, you have some kind of routine that you do where you're practicing over and over and over. And that repetition, you know, you end up being able to do it in your sleep, and it becomes like a second nature, so that when it sets up, you're not hesitant, you're not panicking, you're not a nervous wreck, right? You're executing your plan. That's really all there is to it. Yep. So yeah, Paul, cutting your R in half is fine if you're a little nervous. You have too big of an R. You know, do whatever makes you comfortable. Yep. Yep. Okay. And let me look at one more. NVTA. I don't know if Pablo is here, but this is, I didn't actually get filled on much of this, but NVTA is another one I really like long-term. You guys can see it's doing well. Stock is doing well. Obviously, there's some kind of pullback. At some point, that would have to happen. So, you know, waiting for some kind of a pullback, maybe back down to here. Maybe something like this makes sense. I'm not in any position here. What I would do personally is I would probably leg in with some put sales. So if I really wanted the stock, I would sell in the money put option premium. So I intentionally get some shares, and maybe I sell some option premium here, some more here, and some more here. And even if I only get filled down here, that's fine. I got to start, and I start building my position, and I start my little pyramid where I buy some here, a little more at this level, and a bunch more down here. So anyways, that's kind of what I have for you guys today. Let me hear what you guys want to look at tomorrow. Tomorrow's Energy Wednesday. And I believe our friend Tony, Tony, who does credit spreads, will be hosting tomorrow's the rest of the week. Jerremy is in Yosemite National Park, and the internet is god-awful. The squirrels out there that power the Wi-Fi and the internet are just, they're not cutting it. So Jerremy is kind of a little bit out of pocket. It wasn't playing that way, but you know, Jeremy's got a good team of people around him that can jump in and step in and kind of carry the load for him. So tell me tell me what you guys want to see. MAR, yep, Apple. Let me start writing this down. One sec. MAR, okay, Apple. What else? Walmart. First Solar. XJWN. I'm not sure what that is. Fastly. Fastly is one of my other favorites. CARR. We just need to have Shopify on every watch list, right? HASI, never heard of that one. Tesla. And Tesla will be one I'm going to watch this week. If there's a lot of sell-offs, I'm going to be selling some put option premium. Better believe it. I like the company long-term. I know how they make money. Very innovative. I'm okay with holding it, even if there is some kind of significant pullback. ADP, overstock. Keys, Facebook, Roku, ILMN, NVIDIA. Let's see, Thomas, I do have NEE, yes. Workhorse, 4 to 1 split coming. Okay, let's take a look at NEE. All right. So guys, thank you so much for your time. If this has been helpful, go ahead and just put something in Slack. Just say, thanks for the afternoon room, something. And tomorrow, Tony will be joining us as a host, and he'll be rocking out Energy Wednesday tomorrow. All right. So thank you so much for sharing your afternoon with me. Until next time, don't forget to love life, live life, and trade it. Thank you, and good night.